morning, afternoon, or good afternoon for on a Saturday. Being always, it's a tough because it's a weekend. I always like the sessions most of the time because it makes me to work and make me to share the experience. So this is the one thing which I'm trying to do for many years. And last, I think, the 2 years, I'm trying to do it in through LinkedIn also to learn what I have done. So people don't reinvest the what it is. So here I am just, it's a very close to my heart because whenever I speak with a lot of time, so I just wanted to speak about here the power of compounding, the SIP, the investments. So they says it's a job. So I always tell it's not only the job, it is the what we have learned from the previous parents and I can say family level. So we have to see how they were doing. Is it the good way, new way? How we can try to do it. So to go about it here, I'm just, even though I'm trying to talk about SIPs, 50K to 1 crore, it is when I say like this, it looks like a big things, but it is so easy and simple. But to make easy and simple, what we have to do, how to do fund selection. So these are the things which I'm going to do it, but mainly I'm going to talk about my experience, my customers, the prospects, whom I speak day to day. And let us not reinvent the wheel when we are already seen the things. So this is what I'm going to do. So I do a lot of inductions on an average, I think so to corporate and things. I may be doing four normal webinar, four maybe or four or five corporate webinars on a search on an average on a monthly basis. So when I go and speak with them, why people are not investing? And it is a very different things comes to me, and this is the fact survey has come. People say there's no urgency. Why if life is so long? Why I should invest about it? And most of the time, people will say, which is the highest of saying that, my premiums are high or my values are not having enough money. It is too much of hassle. There is so much of charges. Now, I don't have a sufficient. I don't know how to handle. These are the things. And sometimes people says, okay, brokerage and the fees of yours is high. It comes like that. So that's another perspective of looking from one side. So I always tell people, more, other than looking what you can't, it's better you see what you can. And that's where today's my thought is all about that what we can. So I remember there is anything, I always believe that because I've been following that for the last 20, 30 years. Anything, whatever in hand you come and you do investment for the, let us say, uh, approximately 20%, your lifestyle is not going to change. The easiest way I always tell people that you start with one weekend no spend. Okay. And that amount you start saving. And one weekend, if you're not going out, you can have at home, watch TV, you play with your friend, go out, go walk, whatever you want to do. One weekend is not going to make a difference. But that saving in a long term, it's making a lot of difference. So it's very easy than saying today morning when we were having a walk and somebody says, Rachna, why you all always told about 10 years, 20 years, 30 years of compounding and a bigger value? You're not talking about today. So I say that's so true because all of us forget it as an adult when we have come from a child to an adult. We says 21 years. When we have started our companies, we always says that, okay, you have to give at least 5 to 7 years to grow your company. When you're talking about your, even I worked in both the two corporates, and I can say that 7, 8 years you slogs and then you started growing the exponentially. So the same thing works in investment also. So we have to give the time. And so I'm going to structure this time is first try to understand why we should save. Second is how we should save and where we should save. So these are the three aspects I'm going to do it. And happy to take a meeting or any questions, but let's see if you're able to hear me.
The journey to financial security begins with one simple step. Start saving. The earlier you start, the better. But savings alone is just the beginning. To truly secure your future, you need to progress from saving to investing. When you invest, you put your money to work rather than letting it sit idle. Watch it grow and multiply over time. You work hard to earn money, So why not let your money work hard for you? Invest smartly and reap the rewards. The secret to wealth isn't just working hard, it's harnessing the power of compounding. The more time you give your investments, the more they grow. Invest today and secure tomorrow. Mutual fund investment.
So this is what I was trying to say here. First, we have to understand there's a difference between saving and investing. So saving is like a how our I can say my or our parents must have done. They will put it in your wallet, or they will put it in a bottle, or they will put it in a locker or something where it is not growing. So you are saving, but you're not making a money grow is actually investment. So we have to make money grow. So a lot of time people says why we traditional investment is not so good, Rachna, why you are going non-traditional? So I say there is nothing called a good or not. They were good. But you just think about it that time our parents' time, first of all, there were not so many options. Second thing is debt funds, like a FD was giving 12 to 14% return. Why somebody will do in equity when 12 to 14% returns are coming good? They don't have a so much of money where the tax was coming so much. So now there was no concept of okay, post tax and pre tax kind of part of it. So if somebody is giving me a fixed returns easily around 12 to 14%, why somebody will go for that? The way we were looking now, if you see, most of the people whom I come and do financial planning, they says, okay, I need a kid's education abroad, which is coming 2 to 4 crores. So previously it was very clear it should be in India and it is taking care of those. So those are the difference between our minus one generation and next one generation. And that's where we have to see how in a long term we can make sure to achieve our financial goals and we can give our full family a security. So I'll just go first is what is mutual fund, what are the normal rules, and then what is SIP? Because SIP is a subset of a mutual fund, or a mutual fund is a superset. And then how we can make an SIP working for all goals. So how the mutual fund works? Mutual fund is all the people's money. We pool it across and make it one scheme. And that one scheme fund manager takes care of the buying and selling of the stocks. If it is a equity, if it is a debt or no, we call it debt funds. Debt funds where he will give it to the loans to the company or government or whatever. And that's where the major stock, I can say the mutual funds are divided into two parts. There are many more, but it's a debt funds or an equity funds. Most of the people go for an equity because equity is the one thing which is going to grow and take care of a long term relationship with taking care of exponential growth, compounding, all those things. So these are the things comes. What are the rules of the investing? Can somebody who is old can invest, or somebody who is very young can invest? Yes, in investing, the minor also can invest, and there is no age limit for the investment. But we have to realize very clearly. This question keeps coming to me. Recently, also somebody asked, "Can I invest in my kid's name? Can I invest in my sister's name? Or I give money, but the investment can be in their name?" No, it is not allowed. So you can make a nominee, but you cannot invest in your kids' names, all the stuff. So if you wanted to do in a kid's name, which I have done, and most of the customers, I tell them, you have to open a bank account in their name. They are minors, so they are linked to you, and you are the beneficiary part of it. But you move the money from your bank to their bank, and then SIP goes, then they will be their name actually. Otherwise, you cannot take care. So taxation also comes to the person who has been actually investing through that name. So this question on a minor comes very, very high. That can grandparents can give it in their name and invest in their name. That's also not allowed. Most of the time, these are previously, I think so 10, 15 years back, it was allowed, but now it is not allowed. So you have to give. So many times, if I'm going for a, let us say, housewarming or a kids naming ceremony, I have to give money to the parent and I'll say that please put it in their personal account and then invest in their name. So it's not allowed nowadays anymore. But yes, person, because I remembered our both the kids, I started an SIP when they were not even 30 days old. So it is like that. So it's so young. Also, you can have a minor name starting the thing. So that's the one point I have seen and done personally. Most of the time, it's good to have the kids' names account opening. You do a standing instructions to them, and then the SIP goes in their names. And that's the best part I feel, which comes to when they are 18, you are free that yes, their whatever the education money is being taken care of. What is the minimum and the maximum of investing? That's another good point of this. See, most of the time when we do have a PMS license, we're applying for AIF. So somebody keeps saying, what is the major difference? Actually, may not be the major difference at the concept wise. You have a fund manager, you have the research, you are going into the equity and other things. Small difference are there. But the major difference is the quantum. So in the mutual fund, most of the time, people have a 500 plus, but there is a micro SIPs also is there, which is 100 rupees. But in a PMS, like a 50 lakhs is there, AIF 1 crore is there. There is nothing minimum other than the 100 or 500 rupees in mutual funds. But yes, if you are having maximum, there is no limit on maximum also. You can have 100 crores also, and you can invest 100 crores in that. So, what is the time period one should invest? So, this is the very important part. Look at short, medium, and I can say long term part. So, this is the very funny thing which happens to me. Last month, I was talking to somebody, and whenever the young people comes to me and ask me, I feel very happy because next generation is going, and that will take care of the another family also. So, most of the time, I always says that how a person is coming across, it is going to help. So that person came and he said, Madam, I have just joined EY and all. I wanted to make sure that I am going to invest in SIP. So I said, wow, that's so good. So he gave me some quantum and tell that, okay, why don't I wanted to invest the SIP? So I don't know why suddenly I asked him, you are doing an equity. What is a long term? Because we should look for a long term and all. He said, yeah, I'm auntie. Very nicely, I'm looking for a long term only. Then I suddenly asked, what is duration of the long term? And he said 6 months, and that made me to think so much. And I don't know, I was should cry or laugh that time because I have never imagined that somebody will come and tell me the long term is 6 months. So that then I told him, please don't bother about doing an equity as of today because we feel the market is going to volatile. And if you're looking 6 months to remove, equity is not the right place. So I explained them that clearly in our mind, the mutual funds and other things, if you are looking 5, 7 years or plus, should look at for the equity because whatever statistics you see for 30 years 40 years any other countries nobody has gone loss when you are stayed long for 7 years. So and most of our goals it can be you can say retirement kids educations and other things are 7 years plus. So 7 years and above is a long term when we are talking about when we are talking about let us say 3 to 7 odd it is a moderate risk we call it is a medium term and below 3 years it should be we call as a short term. So when you are talking about terms and why I am talking about these things because the funds what we give it like we will give debt fund and hybrid fund below 3 years. If it is 3 to let us say 7 years we will give it most of the time large cap and hybrid fund. When you are above 7 8 years then we will say of course pure equity mid and small cap also. So these are the reason when we are doing in a time horizons of a short and medium and long, you have to start thinking on that perspective. So this is the another topic keeps coming nowadays. Is it SIP is better or a lump sum? Lump sum means it's like a one-time investment kind of it. So I wanted to give you a scenario where you think your mom or you must have seen so many times when I speak and find it out how the people will buy the gold. Okay, so they always says that okay now gold has come down I better buy more because I'll get a more number of grams of gold or if it is gone high then I will reduce. So most of the time it's called actually averaging. So most of the time, whenever the price goes higher or a lower, we takes advantage for it. Can be like a discounting of anything. You can say I'm just giving example of the clothes or something, anything whenever it's coming from Amazon or something, when it is discounts coming more. I know so many people will say, okay, in Diwali time, no, Rachna, there is so many discounts are going to come, so I will buy those digital things and all. So discounting or averaging is what is in our mind. So when we are talking about an SIP and a lump sum, that's the same thing because nobody can time the market. That's the one thing I keep telling people, the best of the investor, the best of the people whom you can say Rakesh Jhunjhunwala, you can take Warren Buffett, whoever you can think of, it is nobody can time the market. So everybody has got so much of money only for actually it's called a patience or the compounding or the time we have stayed. So the benefit for a rupee cost averaging is the best when you are in SIP. What is an SIP? It is like a systematic investment plan. And what is systematic investment plan? I always try to say, you imagine like your parents must have done a RD, recurring deposit. So it used to come from monthly, your mom's and dad's salary, it will go to the RD. And from an RD after 2 years, 3 years, they will get a lump sum money. The only difference in this concept in SIP is in RD, they will say, okay, this is the interest rate. Here, interest rates are not being told. It is when you have sold, that time, what is the market rate, you will be getting it. So the variability of the rate is there, but the concept of moving from your bank and going to the funds, to the maybe whatever you have choose, large cap fund, mid cap fund, hybrid funds, of going from a bank to the destination of the fund is an SI. Lump sum investment, there are many things they have done it. If you have done lump sum investment on the bearish 7 days, 10 days, how it is done better. If it is done at a high rate, it is low. So nobody knows those permutation and combination. Who knows that when is the today's is the lowest today? And whenever we are talking, we always compare. We'll say, okay, market fall 1,000 points, or 10,000 points, or whatever it is, you are comparing with the past. But when you see the market, maybe 2 3 years back it was just not even 50,000, and now 50,000 has become 80,000 in a Sensex. So you are comparing from 50 to 80, it has grown, but you most of the time, or not only anybody, I'm seeing in a mind, I always say 80, it has become 75. We are not able to see that 50 to 80 also it has grown on the same way. So by nature, psychologically, we always try to see the negativity more than how the positive things has happened. But yes, it is always told if it is in a STP, if it is lump sum. So I always say if it is in a hybrid fund, we called it's a dynamic asset allocation funds. You can do lump sum because the fund manager in between they take care of a debt and equity. Otherwise, doing an STP, which is we called a systematic transfer plan, over the period if you do, is better averaging. So this is what I'm trying to explain here, the advantage of rupee cost averaging, because if you see how the market goes normally like this, and you cannot time the market, you're reducing the risk over the period because all these points you are buying, and that's where that average unit cost you are able to get it across. So here we will be able to say what is the difference between all the three.
Welcome to the world of mutual funds. Did you know that investing in mutual funds isn't just about picking any fund? There are some smart ways to invest and even smarter ways to withdraw your money. Let's check out 3 powerful strategies you can use to make the most of your investments. Want to invest a fixed amount regularly and benefit from rupee cost averaging? SIP is your go-to. It's ideal for investors looking to achieve long-term financial goals and wealth creation. Want to reduce the risk of market volatility by gradually shifting your investments? STP is just what you need. It lets you transfer a fixed amount from one fund to another, helping you manage risk better. Need a regular cash flow without dipping into your savings? SWP is your solution. You can withdraw a fixed amount regularly, making it ideal for retirees or anyone who wants a steady cash flow without the hassle. So, whether you are looking to invest consistently, switch things up, or enjoy a regular cash flow, These strategies have got you covered. Ready to start your smart investment journey?
So this is very important when you're doing an SIP and STP. So I always tell, being myself also a person as a wealth manager. So I always says that you have the best of all Googles, your friends and ChatGPT and whatever. Try to do it because still there are so many. I'm not saying scam, but I said it is limited communications happening. So recently I have seen and I have written last 2 weeks back also that my experience that customer told me ki, yes, I have got it in SIP actually, and Rachna, it has been doing so good, and they told me. So I was just curious enough. I said, okay, you let me know what you have done it. I will able to help you out to if it is good or not good as per me. And when he sent it, and as usual, it was being sold by the bank, and which is actually a ULIP policy. And then I said, actually, it is going to the market. There is no doubt about it. But it is a insurance where you have to give a cost for your insurance. So I'm assuming you are aware. He says, no, I'm sure it is not part of it. And I said, when you have taken it's in a March, it's already over part of it. Now you can't do it. So at least please make sure you pay for 5 years. They said, no, they have showed me that it is 26% return is going to come. And then I asked how it is going to come 26%. So they have shown the last 2 years back, one mid cap fund of a one ULIP is giving 26, and they have extrapolated with 26, which is going to come 4 crore. So I'm saying they are not right, they are not wrong, because they have taken only for one particular year when the mid cap has given 26%. So you have to realize when somebody is explaining you the product that I'm not saying that don't trust them, but you have a bias beware kind of concept that you have agreed. You should know what you are signing for, how you are available to know more where it is. Most of the time, I have seen do it yourself, people have done it. So I said it is always good wherever you do it. But try to do that. People are not scamming because this is the another things, of course, for 5% people are scamming, the 95% of the people are getting an issue like everything. They want an OTP, 1 minute OTP, and it's quite a tedious work for everybody. But yes, people have been, let us say last month itself, the things came that a girl who was in what you call in which bank, I don't remember that. She was removing people's what you call FD and put it into the share market, and it was not able to get. So she got caught, and it can be the 3 6 months back and a yes bank guy. So there are many more people who have used and misused the things. So here in this slide, I'm trying to say concept never goes wrong. So let me tell you, whoever, so many times people comes and I have got this, I have got this. I just tell them, okay, you give me the transaction, I will do it. Somebody says chit fund has done better. Okay, you give me the transaction, I'll do that. Because the full permutation and combination is only risk versus returns. So if somebody has gone very high, they have got it a very high risk. So you have a probability that your capital may not come. Because somebody told me that it is giving me 18% returns. And I said, well, that's not a bad thing, but you should know what risk you are taking. And if your risk is good enough, that's to be not to worry about it. So it is aware risk you are taking it. But most of the time, people are not aware of a risk. Second thing is a risk you have to look not only the market risk. A liquidity risk is much bigger risk. I know a person who has such a maybe I don't know 400, 500, how many crores he's having, but he doesn't have even 1 crore rupees because everything he's having in a real estate. So we have to realize most of the time what is a risk and what is a returns. And risk can be a market risk, it can be a liquidity risk. Of course, if it is international, it is a currency risk also is there. So please try to understand wherever there is a low risk, there is nothing called no. There is nothing, nobody is writing NO. They're saying low. Even FD have a risk because if that become an NPA, RBI will give you only a 5 lakhs. So please make sure there is a low risk. Whenever there is a low risk, the returns will be linked to, if you wanted to find it out, it is like we always say, what is a government bond yield? So whatever is the government bond yields are going on, approximately that amount you will be getting across. So now corporate bond yields are going in between 6 and a half. So most of the time you will find 6 to 6.5 is the returns you will be getting, which is a lower risk kind of it or debt kind of funds. Because who needs the maximum money? Nobody else other than government. Half of the things is going to the government only for that. So that's the reason if government bond yield is that much, they will give it across that much part of it. Of course, gold is a moderate, but gold cycles are longer than this, what you call market cycles. So they goes in 10, 15 year cycles and they just have a spike, then they goes, we call flat, then it goes a spike. So it is doing quite good. Now even silver has doing better than the gold, which is a commodity based. So if you are looking for a good long term perspective, especially if it is looking okay for a marriage of the kids and something, it's good model. We always says 12, 10 to 12% is a good to have the gold perspective. Mutual fund can have a risk low to high risk depending on what type of mutual fund you are saying. You are taking a debt funds, you are taking a hybrid, you are taking a equity, or you can sometimes sector fund also is a much higher funds. So depending on that, you have the risk. So most of the time, returns I always say is when you are looking across a good equity return, I'm talking about Nifty or Sensex. If you are doing 10 years rolling or 20 years, or since inception also, it is coming between 12 to 14.5% return. So assuming 12 to 14% half returns is a very, very good return when you're talking about compound. Where you should look the risk, that's a good point on the risk. Risk is normally has derived by the SEBI on the riskometer we call, and you will see it is color coded very clearly. Whenever you are doing, please find it out. The color coding is like a red is very high and the green is a lower side. Most of the people will have this part of it. So why somebody always says you should do SIP? And this is my all-time favorite topic. Yesterday, my daughter has come from Singapore, and she was telling her friend, she's just 24, and her friend came to pick her from the airport, and I asked, "How are you?" and all, and you started working. Yeah, did you start the SIP? And my daughter was getting very annoyed. She said, "Mama, we have just started working. Why you keep asking an SIP or investment?" So I said it is not that because I wanted something to do through me or somebody, but the discipline is very important. And I give my full credit to my parents because my dad was in army. So discipline came just like in our house by default kind of it. So SIP and doing for a long term, it's great wealth. I have also been doing for last 30 years. I have not missed one single month. And that's what my dad has told that whatever you want, just put 20% and then you just spend whatever you want. But 20% first you invest and then you do it. And till that time from 94 June, I approximately a full 30 years plus, and till now, I have never missed it. And I've never seen the market has gone up, market has gone down, whatever it is, where I have 20%, my salaries goes high, I keep having a higher things. Looked only when my daughter was going abroad for the higher studies. So what we are been doing sometimes, whoever has made a wealth is the discipline and the compounding. You stay long because now even market is down. You remove money, what you will do with that? Is it your kids have become 18 suddenly, or you have started getting retired suddenly, or you become a greedy? So I always says advisor is good not for making all the, of course by default he will be taking care of a portfolio, but actually it is required for you. It's like a second opinion of like how you go to the doctors, or it is taking care of your fear and greed. Most of the problem, if you go across, the problems are either they are very fearful or they are greedy. So please make sure that SIP makes a much, much more 20-year comparisons. You have done it. I can, after this, I'm going to give you the Excel and I'm going to show you. It makes a compounding, and suddenly I have to pinch myself. Oh, is it my portfolio itself? It is, that's the way you will find it out. But most of the person, whenever I have sit across with the people, and this is no, I this person has got this person has got this. And I ask simple question: is it you have continued the same fund or the mutual fund SIP in anywhere for 20 years? We can give you thousand, or including my own personal portfolio, I can give for 30 years I have been continuing. But most of us don't continue. And then we start comparing the past. The difference between what I keep telling and I'm trying to teach, and that's the reason I give a webinar, is even one person have started that I feel it is happy about it. So, how we can make sure 50,000 is not a math, it is actually reality. So, if you do 50,000 rupees per month, it is going to grow around 1.1 crore, which I'm going to show in the recently. So, what are the things we should do the smart selection first? So, first of all, take a selection on the consistency. Of course, there are many ratios. Most of the people take only the returns. It can be 3 years, 5 years, and all the stuff. And then they chase the returns. So, there are many more things. Please try to do, be consistent, try to take care of those. Expense ratios for equity fund, people say, okay, this is the way I do it. I always tell them it's a better you just see what is net of expense you, because that's what it is shown you are getting. Instead of how much other person is making money and not doing it, it's a better to say how much I am getting money. How to take care of risk adjusted returns, please try to take that part of it. But overall level, your consistency on an SIP for a long term. I have started with so many people who are young, and within 1.5 year, no, I wanted to go for a vacation, so let me remove this money and go. And that power of compounding splits. So I keep telling, whenever you are doing any of the SIPs, make sure that's okay. Yeah, this is for my vacation, this is for my contingency, this is for my kid, this is for my the what I call retirement. Please do that and continue that. So another biggest mistake which I have seen in SIP is, I think so last time when you have seen October, November, the highest SIP has closed in the full lifetime itself. Now, by the way, SIPs have started working again. Why? Because they started only after COVID and all, and when the biggest fall happened, and then everybody started looking the red. And that was the best time to continue because you are going to get the best of averaging that time. But most of the people have stopped aside. So SIP stop on the downturn is the biggest mistake anybody can do it. Second thing is they look SIP with the performance last year versus this year. You can I have been doing this psychological that webinar. Whenever last 20 years I have done the 3 years or the last year's, always a performer is never be the next 3 years performer. So don't chase the performance. It's like that I'm just going to go, let us say, to Delhi, and the train goes to Jammu also. I don't want to say that ki, okay, I will go to Jammu because train is going to Jammu. My station has come in the Delhi, I will get down in Delhi. The same thing is like that. I'm expecting 12 to 14% return. I've got it. Simple as that. My all the goals are taken care. What I will do it if I get 30 and in between I got met with an accident. So there is no point in chasing the performance. Have an expectation, right? And go ahead. I have never met personally in our right horizon we have 1,200 families. Personally, I have 100, and I meet on an average 2 to 3 new prospects or people calls me. Nobody will say that my SIP in 10 years is less than 12 to 14%. Nobody. But are we ready in committing for 10 to 12 years? That's the question we need to ask. Asset allocation is another thing. So I people have taken a ELSS funds, people have taken a equity funds, and they want to exit like a lock-in funds and all. You can't exit. So I keep saying keep some amount for in a contingency, which you can come like a debt fund can work in a 1 day. If you want a contingency, try to do those point, then saying that okay, they are not flexible. The another point I have noticed it, oh, I have given the SIP total amount. They will say 10. I'm just giving example like a I have given a 50,000. I gave you 6 lakhs and it has become 6.5. How it has become. So a lot of time people do absolute returns. And I keep saying when you're doing an SIP, your first month has keeping for 11 month or 12 months. The last month, only 1 month your installment has kept. So you can't compare the last month returns versus the first month is the same. Because that's a good thing. Of course, in a formula in XIRR takes care of a daily based returns, but still people's mind is also that. So don't compare your SIP when you are doing in absolute terms because number of days are different for each installment.
Chinese bamboo is the world's tallest grass, which goes up to as high as 80 to 90 feet in a little over 5 years. When you sow the seed and start watering and nurturing it daily, you don't see it growing for 5 years. It would be frustrating, isn't it? But wait, miracle happens after 5 years. It grows from 0 to 80 feet in less than 90 days. Similarly, growing well through SIP also requires a lot of patience. Had you started an SIP of rupees 10,000 in September 2010 in large cap fund, the value of your total investment of 3.6 lakh rupees would have been 3.57 lakh rupees after 3 years. Had you stopped an SIP, this temporary loss would have been permanent loss. But had you continued an SIP at the end of the 4th year, your value of total investment of 4.8 lakh rupees would have been 6.95 lakh rupees. And if your SIP still continues till March 2019, the value of total investment of rupees 10.3 lakhs would have been 17.38 lakh rupees. Remember, correction is temporary, growth is permanent. So continue your SIP for long term to create wealth.
What are the different SIPs benefit? As I told you, it is simpler way to start. So it is fixed in your bank and then it will automatically goes like how you must have sent for any of the loans or EMI. First time you set up, it will keep going at across. They are flexible. You can choose whatever frequency you want. You have daily, monthly, quarterly, but most of the time people prefer the monthly because that's where the salary comes. And I always say when your salaries are coming around first or whatever days, within 5 days you should choose those date. You are ability to increase or decrease. You can nowadays pause also. You have a variable part of it. You can do that part of do. You are doing an averaging. You can have a diversification in the SIPs. If you have a 10,000 rupees, you divide into the five different parts. One is for the debt, which is take care of a contingency. Another goals where I always is where one give a mid and small, one is a multi, one is a large, and one is a hybrid. So you are taking care of all those. There is no restrictions for when to start. You can start any day, any time of the day. And there is no restriction on minimum and a maximum other than the talking about minimum, you start with the 500. These are the interesting resolutions. You should have it. Make sure if you have it, I can, without knowing you, I can tell you, you will be achieving all the goal. Create a good contingency or emergency fund for how much to do it. Whatever is your monthly expense you are doing, let us say 1.5 lakh into six, keep it in FD or a debt funds. Make sure that for a short term goals you have it, put it in a debt or FDs if you are okay, not in the higher bracket. Otherwise, the debt funds are the better off. Long term, above 7 years, please put it in a long term equity. The best part of these mutual fund stocks are capital gain is the least of taxation. Even though they are at 20 and 12 and a half, it is the least of taxation. Otherwise, everything is either added to the income and it is going to 33%. Start doing an SIP in equity. Don't attempt to time the market. That's one of the worst thing you can think of. Make sure that you take the tax savings. Don't wait for the last if you are in a old regime. Investment which is you don't understand, please don't do it. Otherwise, ask somebody to make sure stick to your goals and make sure investment on the goal. So that's the one thing I will. This is the another powerful saying that how power of compounding works. Both of them have started at you can say the age of 35 and 25, 5 and 15,000. Both of them, if you see here, this is just at the age of 60, 21 lakhs, and he's invested 45. It's still, he has got around 4 crore versus 5.7. So I'll just show you the my Excel. If you please let me know if you are able to see my Excel. Can you see the Excel?
Yes, ma'am.
So I'll start with the topic what thing is that how to make a 1 crore when it is 50,000 is easy. So this is the maximum used, I can say, the Excel. Almost all people comes and they start saying that, okay, I wanted a 1 crore for 10 years, 15 years, or whatever amount, how to put it across. So if I say it around, let us say, 10 years, and then if you put it across 12%, you have to just invest 43,000 rupees. So if I'm not wrong, that comes under the 8 years. And it will be 62,000 rupees. So most of the time in these goal based days, it is just a power of, we call, most of the time it's a PMT or future value or a present value. This is nothing called rocket science, but this is just showing that how your power of compounding keeps going across more and more. So you have to realize it when you are at, let us say, 20 years. Your 4.5 times is actually going. So if you keep playing around with a number of years, it keeps going the number of times very high. So every 5 years, it keeps growing like anything. It's now six, four is gone as a six times. So most of the time, this is the most powerful, I can say, SIP calculators you can think of. But this number is, I can tell you, it's a very easy. But important part is your this number of years, how many days or time you are going to continue that. That is the key of anything. The discipline and the patience is the key. I can tell you how it is. Second, most people use is delay cost. The delay cost is most of the time they will say, okay, I'll start investing. Let us say 10,000 rupees for the 15 years. I'm just taking it as a very conservative. I normally take a 12 to 14% returns in the long term. And they delayed for 5 years. So if you see, the 5 years delays is almost actually going half a pay plus. Supposed to be, if it is matured, it must be 50 lakhs, and 5 years delay is making 23 lakhs less. So this is the another point of time we have to start looking how to take care over the period over it. So this is the advance. So this is the table of the SIP which says that if I want 10 years, for 5 years, 10 years, 15 years, how I'll be able to take care of this part of it. So I'll just take it a simple calculator here. Most of the time, SIP can be used for the home loan. What is the required downturn? People have used the maximum, I'm telling you, is for the kids. The kids are the one things which is used that, okay, your kids, daughter or son, whatever, what is your age? As on today, what you want the education amount will be. When they are 18, how much it will become. So 20 lakhs is going to become 55 lakhs. And if I'm expecting equity returns at 12%, how much money I should save per month? So this is the 16,000 rupees. I have to save a one SIP 16,000, which will take care of my kids' education. Same thing for the retirement. So it is taking care on an overall level. If I have a money currently expenses is 50,000 and I'm just 55. So let us say 35 years old I am, and 60 years I wanted to retire. So 50,000 of today's value will become 2 lakhs. So when I'm retiring, I need a 5 crore portfolio. I just need a 32,000 per month rupees. So these are the smallest way, but what is required here? 32,000 for the next 15 years. So the key attempt is not the money. The key is most of the time is the how to take care for the long term. So I'll share this calculator, of course, with you all. So saving mantra, as I told you, that most of us will pay EMI, will spend, and then we will say that, okay, how much we should save. But the reality is you should keep 20 to 25% first, invest, and then exactly you should do that part of it. The financial goals, as I showed in I can say in the Excel, the same thing. Whenever you have an emergency fund or a short term, like let us go for a, I'm just giving example for the kids' fees I have to pay every year, or I have to take care of a small vacation or a travel, something, you should invest in a debt funds. When you are looking a medium term kind of returns goal, medium is, I'm talking about 3 to 5 years, should take it as a hybrid plus debt funds goal. When you are taking a long term, kids higher education, wedding, retirement, you should always do foreign equity mutual fund SIPs. These are the long term retirement goal. You can think, as I showed just now, how the things keeps going if it is 35 years and 60. If you have taken a life expectancy till 80, 85 years, so how much you have to take care of monthly 20,000. So make sure, if you are continuing monthly in a saving banks or an RD or a mutual fund, how your total returns are going to create the corpus. You can see the difference in the power of a compounding, and the total corpus has been created over the period. Can I withdraw in mutual fund? That's the best part of it. You can withdraw anything other than the lock-in. Lock-ins are most of the time, I can say it's very few I have, but ELSS funds have the highest lock-in, which you can't do. But 90% or 95% of the funds you can actually remove anytime. Only thing is exit load may be there. There is not lock-in, but they may be having exit if you have not kept it for a 1 year perspective. How rupee cost averaging works, if you see, I'm just saying, in a rising market or a falling market, how the NAV is been going up and down. So if you see here, this is the way your averaging comes on a NAV perspective. With this, I take a questions and happy to speak with you. Thank you.